Before we start this video, do like and subscribe to our channel and not miss on any updates.
So dear students, let us now understand the concept of strategic management. One thing I want to make it clear upfront is that whatever we learn in this particular subject, that will be in the context of business. Now when I say business, that business can be anything. It can be business of manufacturing, trading, services, whatever it is. But then please remember, the fundamental objective or goal of a business is to earn profit. And in today's environment, in today's scenario, there is a lot of competition in the business. There is a lot of competition in the markets. And to earn profits, you need to survive in that market. You need to overcome your competition. You need to do better than your competition. And you need to keep adapting to the changing times, right? All of these things we'll understand as a part of strategic management. So the fundamental objective of a business is to earn profit. And what does a business do to earn profit? That is what will be covered in this particular subject. Now don't think that by reading this particular subject, you will become a master and the very next day you can start a multi-million-dollar enterprise. It doesn't work that way. There are a lot of other factors as well. So you'll have to learn a lot about the businesses. Now when we say businesses, what do they do? Why do they do? How do they do? All of these things is what we will understand briefly in strategic management. Now the concepts of strategic management that we will be learning is not only applicable to business, but a lot of these things will be applicable in your day-to-day life as well. For example, let us say you are participating in a game. It could be a football, cricket, basketball, whatever it is. You are participating in a particular game. Now, when you are participating in a particular game, let us say for sake of understanding, it's a cricket tournament. So, when you are playing a cricket match, is it that you will just simply walk into the cricket stadium and start playing the match? It doesn't work that way. Whenever you are playing a cricket match, you will see how strong is my team, how good are my batsmen, how good are my bowlers. Then what is the opponent? How is the opponent? How many good batsmen they have? How many good bowlers they have? What is their weak point? Correct? So you are evaluating your own team. We call it internal environment. You are evaluating your competition, which is a part of your external environment. And then you will also see the ground. What is the pitch? Is it a batting pitch or is it a bowling pitch? What would be the weather conditions? Will it be windy? So many things you evaluate and then you plan properly. Now, I am not talking about a gully cricket where you will just start playing. I am talking about a proper tournament, right? So, that is where you are applying a lot of concepts, knowingly or unknowingly, of strategic management. As we learn ahead in the chapters, you will understand, this particular concept, I have actually used it in my real life. That is what is strategic management for you. Or take another example. What is your career goal? Sir, I want to become a CFO of a particular company. That is my goal. We call it our dream. We also call it our vision. So that is where you want to reach. Where are you? Sir, I am at CA Intermediate. Okay. Now from CA Intermediate to become a CFO, what all things you need to do? I have to pass CA final, I have to start working in a company, then I have to grow in the organization and then I will become a CFO. Now whatever you are doing this, thinking about becoming a CFO, let us say 10 years from now, that is also strategic planning. Right? I know these terms are new to you, but you are actually building a strategy. How will I reach there? What should I do to reach there? How should I take classes? Online, offline? Where should I do my articleship? Should I do industrial training? A lot of these questions you are answering and then you are forming a strategy. Or take the case of your examination. When you are appearing in an examination, what do you think? I have to pass this examination. That is my goal. Now, to pass the examination, I have to prepare well. I have to plan my preparation. And then I also need to identify what are my strong subjects. Accounting is my strong subject. FM may be my strong subject. Audit, SM, law, these theory subjects are not my strong subjects. So, how should I plan for them? So, there also you are building some kind of strategy. So, in this particular subject, we will understand in a proper framework as to what does business do, why do they do what they are doing, how do they win over the competition, how do they use the resources that are available, and a lot of other aspects related to business. Another thing that you need to understand is that businesses which have been successful, businesses which have been great, have applied concepts of strategic management in one form or the other. See, it may not be a formal application, but knowingly or unknowingly, like you plan on a daily basis, you have your own strategy for the day, you have your own strategy for the preparation. No one taught you this in formal education, right? Similarly, these concepts are applied directly or indirectly by businesses. And if you look at successful businesses, you will see that they have implemented some specific strategies pretty well. And whenever businesses have failed, you will see something or the other went wrong in their strategy. Now, to give you some more perspective to this, as of today, you are holding smartphones in your hand. You are using smartphones. Maybe we are introduced directly to a phone which is a smartphone. But way back, there was a leader in the phone market, in the mobile phones market, which was Nokia. Okay, Nokia was a leader in the mobile phone market. Gradually, new companies like Samsung, Apple, they started introducing the smartphones. Nokia, what they had was a feature phone. You can check with your parents, the kind of phones they used to use before the smartphones were introduced. Now, Nokia saw that something is happening in the external environment. See, Nokia as a company is running as it is, but in the external environment, new things are happening. New competition is coming, new type of technology has arrived in the market, internet has become more and more accessible. But then, Nokia chose to ignore all of them. Nokia chose to ignore all of them and said, no, all of these things will not work. We will continue with our feature phone. They launched a version of a smartphone, but again, that was with a keypad, right? And suddenly, around 2010, the smartphones market started picking up very fast, okay? And then, by the time Samsung and Apple were well established and Nokia did not have a response to them. So, a leader in the market, the one which was commanding maximum market share, failed in the business because they did not respond to a change in environment. They did not respond properly to their competition, and that is where they were not successful. Now, one thing I want to clarify here is what Nokia chose or what Nokia did is also a strategy, thinking that, or as per their understanding, whatever they were doing was right. The market is not going to change. Customers will continue to use the feature phones or the phones with keypad. Nobody is going to use touch-based smartphones. That was their analysis. Now, I can say that the strategy was wrong only after some years of time. When they took the decision, at that point of time, maybe that was the right strategy. Today, if we see and go back, we realize that that was actually an error. That was actually a strategic judgmental error. But that we can say only in the future or only after the events have happened, right? So, when a particular company chooses a particular strategy, it may work, it may not work, and that can be realized only after its implementation or only after the time passes. Another classic example is that of Kodak. Now, Kodak was a leading role maker. Kodak was leading the photography segment. Earlier, when we were young, we used to have something called as film roll and a camera. So it is not like a digital camera or mobile phone camera that you have today. So we used to have a reel and we could click only about 36 pics in a single roll, right? We have to be very careful. We couldn't do clicks like you're doing today. We can't do, hundreds of shots to get the perfect shot. It was 36, limited, costly, and Kodak was leading both the, camera segment and the photo paper segment as well. They also had done some research and they were trying to figure out digital camera, but what they thought was, this is not something which will work, okay? And what happened? From 90s onwards, gradually digital camera were, getting popularity, and as of today, if you see, you don't even hear about Kodak, right? You hear, and today, mobile phones have taken away major part of the photography segment. Maybe Kodak could have also come up with a camera, correct? Maybe Kodak could also have come up with a mobile phone, who knows? But then they thought that this is not going to happen, this will not change, and hence they continued the way they did the business, and as of today, a leader in the market is no longer existent. Now, these are some examples of why some strategic decisions go incorrect. We are not saying they didn't take a strategic decision. They took a strategic decision, they decided on a strategy, and that did not work. Now, one thing you might be wondering, sir, are there only business failures because of wrong strategy chosen? That is not the case. We have highly successful businesses as well. New entrants like Jio in the market, they have displaced, they have wiped out the competition, and they have a huge market share as of today. If you look at companies like Apple, Facebook, Google, they have been successful. If you look at manufacturing companies like Tesla, they have been successful. If you look at companies like Tata Motors, Reliance Industries, if you look at ITC, if you look at Infosys, all of these have been successful companies and they have done something right because of which they are successful. Of course, luck plays a factor, but then you have to do some things right and then only the businesses become successful. Now, another question that you may have in your mind is that, Sir, when is it all about businesses? When we are talking about businesses, why are we learning these as a subject in our CA course? And as a chartered accountants, how is this subject even going to be useful for us? Now, let us look at multiple things on how this subject will be helpful to you, why these concepts are important for you. Now, let me ask you one question. Once you qualify as a chartered accountant, once you become a chartered accountant, what is your plan? What do you want to do? Sir, I want to work in a corporate sector. So, basically, I want to take up a job. Now, when you're working in a corporate sector, when you take up a job, don't think that you will be passing debit and credit entries only. If you do that, you will not grow in your career. So then what are we supposed to do? You are supposed to understand the business. You're supposed to understand the business. And whenever business takes a decision, you have to evaluate those decisions and you have to give your inputs, both from finance angle and if you have some understanding of the competition, the environment from other aspects as well. Only then you will add value to the organization and you will grow faster in the organization. Don't think that because I am a chartered accountant, I am bothered only about numbers. That should not be your approach. You should try to be a business consultant. You should try to support the business in their decisions. That is the first aspect, right? Then some of you may tell, sir, we don't want to take up a job. We want to start our own practice. Now, your own practice, though we call it a profession, that also has to be run like a business. You have to find ways to get more clients. You have to find ways to improve your practice. When you start providing services to business entities, you need to give additional value. So, if you only give compliance related advices and if you are not able to give business related advices, then you will only be restricting yourself to compliance related aspects, right? So there a business knowledge is important. The management knowledge is very, very important there. Sir, I don't want to do all of this. I want to start my own business. Very good. If you want to start your own business, then this subject becomes very important for you, right? So whatever you want to do after you become a chartered accountant or after you qualify, this things that you learn will be very, very important and it will be useful in your day-to-day working career. That is why this subject has been introduced as a part of CA curriculum, and even after so many syllabus changes, when I was in P1, I used to learn organization management at CA foundation level. Then subsequently they moved it to PCC, IPCC, CA Inter, again now CA Inter new syllabus. In all of these, this subject has stayed intact and chartered accountants are expected to understand businesses and understand how business decisions are taken. So now we have broadly understood, how strategic management is useful for a business, and broadly you would have got an idea of what we are telling or what we are thinking when we use the term strategy, right? Now, this thing, strategic management, when you talk about strategic management, there are two terms, strategy and management. That is how the term strategic management comes to it, right? Now, first we'll understand the meaning of this term management, and then we'll understand what is strategy, and then we'll understand what is this strategic management. Now, when we say management, you would have heard of a lot of words like event management, right? Or it could be management of a household. That is also management. Now, when we say management, what comes to your mind? For example, if I say household management. Now, don't say, sir, this is the definition of economics. Now, what is household management? What do your parents do to manage your household? They have to get income, they have to earn income, they have to plan where all the expenditure have to be done. So, they think about what are the income sources, what are the expenditure sources, what is to be done, where do we need to get, new type of equipments, maybe some TV, studies, everything, right? So, they do management. So, when we say management, what we understand is it is a process. When we say management, what you understand is it is a process. Similarly, event management, it is a process of managing the event. So, the term management, when we talk about, it talks about a process of managing what? Process of managing resources, But what is the objective? You want to manage the resources so that you achieve your end objective, right? So, if for example, you have an event at your college, now for this event, you have to plan what are the shows, performances, what would be the spending, how will you collect the money, All of this becomes your management. So here we are saying management is a process. Now what is the process? Now what is the objective of the process? To achieve certain end goals, right? So what is the management here? Management is a process so that we successfully conduct this particular event using the resources we have. So management as a process has planning, what to do, how to do, who will do when, right? That is, and what are the resources needed, timings and all of that. Organizing. So you plan. Organizing means you have to organize the resources. You need to get people who will participate in the event, right? You have to organize money. You have to get relevant slots, a place to perform. All of that comes in organizing. Planning, organizing, directing. Directing means how the event will be conducted. So you're planning, organizing, directing, and controlling. Controlling means, is the event going as planned? So when we say management, you have to plan, you have to organize, you have to direct, means give them the direction how it is to be executed, how you will implement, and as you implement the plan, whether you are achieving the desired objects or not, that you will come to know through controlling. So management as a process involves all of this activity. But then there is another dimension to management. You would have heard about, or you would have used this term called, we have to take permission from college management. We have to take permission from whom? From college management. Now when you have to take permission from college management, is this college management a process? That is not a process. So then what is this college management? Maybe your head of departments, or maybe the principal and the vice principal, someone who is managing the college. So we have got two aspects here. First one is, we are saying when we say management or when we say to manage, it is a process. Someone who is executing this process is also called management. So here these are persons, right? So that is also called as management. Now when you look at, again I am coming back to your college or school example so that you can relate this to a real business, and then we will come to what the business has. Now if you look at your college or if you look at your school, there would be something called as, in most of the cases, board of trustees, right? Now in this board of trustees, you will have the chairman of the board, the vice chairman, and some members who are basically in charge, who actually see that the college is functioning properly or the school is functioning properly. So you have some set of people called board of trustees. They are nominated, appointed, all of that depends on college to college, but there are board of trustees. Now the board of trustees, the role is not to do the actual work. They will not do the actual work. So then what will they do? They will supervise, they will oversee what are the relevant head of departments doing, what is the principal doing, what are the teachers doing. They are basically in charge to ensure that the way the college was supposed to function, it is actually functioning. They are basically overseeing the people who are working in your college. Now under the board of trustees, you may have someone who is the principal. Okay, now who is this principal? He is someone who is in charge of the college. Principal will report to board of trustees, right? Then under the principal, you may have, vice principal. Okay, so I'll not get into that. But then under the principal, you may have head of department. Now head of department for, let us say, commerce, head of department for arts, head of department for science, if it has a science division, right? Now under the head of departments, you may have in charge. In charge for what? First year, second year, third year, right? Then under the in charges, you will have your teachers who will actually, come and teach. Now this board of trustees, their role is not to go and teach in the class. Teaching will be done by whom? Teachers. One of the teachers would be your in charge, who is responsible for whatever happens in the entire class. Then all of these will report to whom? Head of department, commerce. He is responsible for what? He is responsible for all these 3 years put together. First year, second year, third year, whatever falls under the commerce stream, he will be responsible. He will report to whom? He or she will report to whom? The principal, and the principal will report to board of trustees. Now, when you say management, this entire structure or all the group of people who are managing the college can be called management. Now, management, what happens is, in any organization, you bifurcate them. That is top level. Generally, these two would form under top level. This would be the mid level. This would be the lower level, right? So, in charge also could be a part of mid level, depends on organization to organization, right? Over a period of time, a lot of businesses have undergone a change, and there are concepts of, direct reporting also. So, I'll come to that when we learn about organization structure. But here, what I'm trying to say is, this entire group is also called as management. So, management is a process. Management also refers to a group of person. So, that is what is the meaning of management. Now, how does management look like when we see a business? So, in a business, typically you have something called board of directors. Board of directors are basically the group of directors who are in charge of giving direction to the company, ensuring that the company is doing what they are supposed to do, the business is performing as they are expected to perform. So, you will have board of directors. Okay. Now, the board of directors are the topmost authority in the particular business or a company. Now, these board of directors are appointed by shareholders. Shareholders are owners, and the board of directors represent management. That is why you would have heard that in company form of organization, the ownership and the management is different. Shareholders may be a part of board of directors. For example, if you look at Mukesh Ambani, he is the chairman of Reliance Industries. He is also a shareholder, but there could be possibility that some shareholders are board of directors. Or if you look at IndigoLearn, I am a shareholder, I am also a director. Okay, so a shareholder can be a director, but then both these roles are separate. So there is ownership interest, and these are the management. The board of directors are the management. Typically, under the board of directors, you have someone called executive directors, or in some organizations they refer to this term as president. Okay, not president of the country, president of a department or a function. Now, what are these executive directors supposed to do? See, to run any business, you need money. So, there is some role of someone who is in charge of finance. Then you have to carry out the production, supply, distribution, and all of that. That is called operations. So, if you look at executive directors, you may have someone who is an executive director of finance. Now, what is the role of executive director of finance? To ensure that money is, the inflow and outflow of money is in line. Money is raised whenever it is needed. If debt is to be taken, debt is taken. If equity is to be raised, equity is raised. The cash flow is managed. All of that is the responsibility of ED Finance or executive director, or we also call them as chief financial officer in some cases. Okay. The board of directors, I told you, has a chairman whom we also refer to as sometimes CEO, and these terminologies are different for different organizations. There is no hard and fast rule. Then the next important role you see is someone who is handling the operations. Operations is getting the raw material, manufacturing process, supplying process. So all of that would be under ED, let us say operations. I'm just giving some designation. We also call them COO, Chief Operating Officer, right? Then human resource is another important dimension. The recruitment of people, the training of people, how many resources to be obtained, all of that comes under someone who is handling the HR function. So the role of heading the HR function, some of them call it a chief people officers. Okay, fancy terminologies you would see. Then you can have someone who is handling the marketing. Marketing is basically understanding the market, generating demand, getting our products to the right customers. All of that is under marketing, your advertisement related aspects and all of that. So that you can have someone like CMO, Chief Marketing Officer. Designations don't matter, you need to understand the structure. Okay, so if you look at a business, for example, if I say Reliance Industries, for example, board of directors have some directors. Chairman Mukesh Ambani, Mr. Mukesh Ambani is the chairman of the board. Okay, then you have various roles and responsibilities: CFO, COO, CPO, CMO. This may not be the actual structure of Reliance, but I'm just giving an example. So what is the role of CFO? The CFO has to ensure that finances are in line. COO has to ensure that the operations are happening properly. CPO should ensure that the human resource aspect is taken care well. CMO should ensure that the marketing is happening well. Sir, are these only 4 functions? There can be many other functions as well. There could be someone who is handling the IT, very, very important these days, right? So there can be Chief Information Officer. So there could be someone who is a CIO, Chief Information Officer. So like this, you have a management structure, right? Now another aspect here is, instead of calling them ED, I can call them GM also, General Management, or President, you can call them Vice President, or as I told you, you can call them Presidents as well, right? So it can be President Finance, it could be President Marketing, it could be General Manager. Terminologies differ from companies to companies. Now, when we look at this setup in a business, the group of people who are managing the business, that is what we refer to as management. Generally, these form part of your top level management. Then, under ED Finance, now I am talking about more about finance because finance is something you can relate to, right? So, under ED Finance, you can again have multiple people working. So, who could be working under ED Finance? There could be someone who may be responsible for treasury. Treasury is the aspect related to your banking operations, money management and all of that. Okay. There could be someone who is related to or who is responsible for financial reporting. Now, financial reporting means preparation of financial statement, coordinating with the auditors, all of that comes under financial reporting. So, you could have terminologies like someone who is a Vice President of Treasury, Vice President of Financial Reporting, you call Finance Manager, something like that, right? Then you could have, this is 1, this is 2, then you could have someone who is a, tax manager who looks after taxation. Then under that also you can have direct tax, indirect tax. So you can continue to make the list or you can continue to build the organization structure depending on what each person does, right? Now, let us say for example, you join, okay, and you are placed or you are interested in direct taxation. Maybe you will report to someone who is a VP taxation. Under him, you will join as maybe a tax analyst or executive for direct taxation, something like that. So these are typical way to look at an organization structure, and the ones who are at the top, generally the first 2 levels are called top management. Or sometimes if the board of director is only the one who takes a decision and they are the one considered to be top management, that is also possible. Then from here, this becomes your middle management. So here this is your top management. This is your middle management. This is your lower level management. There is no hard and fast rule. Okay, so it depends, you have to look at the organization, but normally this can be the classification to look at top, middle and lower level management. Now, the top level management is not involved in day-to-day operations or day-to-day working. So then what will they do? Will they just sit in a cabin and they will just relax and they will just enjoy? That is not the case. It is not easy to be in the directorship position. So the role of the top management or the board of directors, if you see, is to think about the company's long-term future, long-term goals. So basically what the board of directors will think or decide is, from today, after 5 years, where do we want to be? What do we want to do? That decisions, those type of decisions are taken by top level management, and the decisions which are taken by top level management are called strategic decisions. These are strategic decisions. Now, the strategic decisions talk about the long-term future, long-term planning. very, very important decisions. They will decide in which direction will the company go. So these type of decisions will have a long-term impact, very significant impact on the performance of the company. Decisions could be like, should we enter into new markets? Should we introduce new products? Right? Then, should we acquire another company? Now, when you join as a tax analyst, you will not decide whether to acquire another company or not. Who will decide? The board of directors will decide. They will take a decision whether we should acquire a company or not. But then, to take the decision, all of these, right from your level, what is the impact on taxation? What happens when you acquire another company? Carry forward losses, what will happen? Right? Then what will be the impact on the block of assets? All of those things from taxation angle, you will give the inputs. Or if you are in the finance field or financial reporting part, you may help in the valuation aspect. Treasury will tell, we don't have money, we may need to raise more money to acquire the business. So inputs you will give, but decisions will be taken by the top level management. So these are the strategic decisions, the long-term decisions. So whenever you hear the term strategic, the first thing that should come to your mind is long-term planning, long-term decision making. That is what is meant by strategic decisions, right? Then top management will decide. So then what will the middle management do? The middle management will take the decision of the top level management and they will make it into actionable plans which will be further given down to the lower level management who will implement the plan. So think of it like, in a family also, if you have grandparents, parents and you plus your sibling, if any. Okay. Think of these grandparents are someone who will say, okay, let us buy a property. Okay, okay, we'll buy a property. What will the parents do? Parents will look for the property. They will figure out where to buy, what to do and all of that. What will you do? You will do the shifting work. You may give inputs. We can take in this society, this location, that location. But your major role will be there in shifting. Who will arrange money? Parents, right? So this is just a way to understand how strategic management actually works in organization. So with this, we have understood the term management. We have understood 3 levels of management and we also got a broad insight of strategic. Whenever we say strategic, it is long term. So as far as management is concerned, we understood 2 aspects. One, it is a group of people. So group of people is called management, top management, middle level management, lower level management, and the activity that they perform, the process that they perform, that is also called management. So we have 2 ways in which we can understand management. Now when it comes to group of people, what is the objective of the group of people? The objective of the group of people who are coming together and who are managing an organization is to ensure that the organization is a purposeful and productive entity. In other words, they can achieve their goals. And how do they do it? They bring together resources like money, material, manpower, machinery, technologies, etc. So they get together, they bring together different resources, man, money, material, all of that. They manage it and they produce output so that the ultimate objective of the enterprise is met. And finally, we have understood that the objective of a profit-making enterprise is to make profit. Yes, so that objective has to be met. And when it comes to process, management is a set of interrelated function and processes carried out by the management. So whatever management does is also called management. And again, here it is to obtain the organization objective and to perform functions like planning, what to do, how to do, organizing all the resources we spoke about, directing, telling the resources what is to be done, staffing. Staffing is basically getting employees, ensuring that there are adequate number of people working in the organization, and control. Control is basically checking whether whatever we have planned is achieved or not. Now, what is the important of the group of people who is a management? They will decide goals, the objective of the enterprise. They will mobilize resources. They will get together the resources. They will design the organization, allocate tasks and help in achieving the objectives. So when we talk about management as a process, what we need to understand is management as a process is carried out by the management. So if the management is effective, the process will be effective and they will be successful. That is why we will hear this term good management, good management practices, bad management practices, and all of these aspects, right? Very important point of view. Most likely an MCQ can be asked here, or sometimes even a theory to distinguish between management as a process and management as a group of people.